federal government is asking that senators allow for the restructuring of the ways and means borrowing from the Central Bank of Nigeria, converting the debt to a 40-year bonds at 9% interest rate. What does it really mean, all of these figures and all of these requests? Well, we have Kelvin Emmanuel, the Chief Executive Officer of Dairy Hills, joining us from our Abuja studio. Hi, Kelvin. Good morning.
Thank you for having me, and compliments of the season to you and everyone viewing us today.
All right, so Kelvin, tell us, what does it mean when the federal government is asking for restructuring of the ways and means? We do know that the ways and means is the CBN borrowings to the federal government, but when they ask for restructuring of this 23.7 trillion naira, what does it mean?
Thank you. So for me to explain what it means, it's important for us to understand that in the CBN Act, the Act establishes the CBN as amended in 2007, Section 38 specifically states that the CBN is a lender of last resort to the federal government. And in situations where the central bank the federal government has a shortage and doesn't have any wiggle room for covering up budget deficits, for example, the Central Bank of Nigeria, as lender of last resort, is obligated to use quantitative easing, which is a means through which it generates money it doesn't have value for because it's a central bank, and lends to the federal government. And that limit says 5% of real revenues for the previous accounting year. And if you look at 5% of real revenues for previous accounting year, it's between 450 million and 500 million USD. But you have a situation where the CBN has violated that act, and they've generated through quantitative easing about 105 times, which brings that window currently to about 49.2 billion US dollars. It means that CBN generated cash it doesn't have value for, either in storage or in foreign reserves, to the tune of about 23.7 trillion naira, in violation of Section 38 of the Ways and Means Act, which basically gives you like advances and turns into overdraft, attracting about 0.5% on a monthly basis to the federal government. So now you have a situation where, because of this, there was too much cash supply into the economy, and you have inflation, which is a result, which is currently about 21.43% for 21.73% for 30%, if I'm not mistaken, for core, and about 23.73% for food inflation. And you have a serious devaluation of the naira. You have a reduction in purchasing power of Nigerians. And then you have a corresponding ratings downgrade by Fitch and Moody's. You've seen local and foreign currency issuer ratings downgraded to B-, that has taken the spreads and the yields on bonds, government bonds, up from about 13.814% to about 17.818%. And this is some style, the kind of issues that Sri Lanka had, Ghana had, Lebanon had, that currently cost Ghana to default on its bonds. So right now, the federal government cannot pay back these loans to the central bank. It's opted to restructure these loans into a 40-year government bond, and it's offering the market at 9%. I don't think any sensible investor is going to buy that bonds at 9%. And what it means basically is that whenever short-term debts, the yields on short-term debts is higher than the yields on long-term debt, it means that your bond yield curve is flattening and very soon is going to begin to invert. And when that happens, it's a sign that you're in a recession, because the GDP numbers show that it's dropped over 1%. So what you have basically is a situation where there is a huge budget deficit because the revenue to GDP ratio in Nigeria is 7%. The government is struggling to generate revenues to fund its budget, which is going to go about 20 trillion naira for 2023 Appropriation Act, and is having to rely on the central bank to use quantitative easing to generate money it doesn't have value for to fund its budget.
So this conversion now to bonds, obviously Nigeria is still going to have to pay back. So we're talking about more debt servicing. I know that the Economist intelligence unit had warned already that some African countries are going to have heavy debt servicing next year, even though they did not mention Nigeria, but we do know that we're at a threshold at this time. But what really does this do to the economy? And especially when you look at the incoming government, this will be their burden to bear.
Well, you know, it's a very bad situation because the debt to GDP ratio is going to rise by around 10%, from 24% to about 34.5%, if I'm not wrong. And this also, you know, hits, it's warning bells, it's alarm bells. It hits the Fiscal Responsibility Act crisis level of 40% of debt to GDP ratio as danger level. And this is the reason why I believe that the DG of the Debt Management Office it's time for her to sit all the adults in the room and tell them that, look, we're on an unsustainable path for our fiscal strategy paper in a medium-term expenditure framework, and the road we're going on is going to lead us to the Ghana type of situation. You know, you have the debt on GDP rising from about 1.75% to about 2.5%. Nigeria's credit default swaps, which is basically like a premium that foreign creditors charge or traders charge in the markets to, you know, bet against the fact that Nigeria is going to default on its debt, has risen by 400 basis points, about 1,300 basis points. Ghana, with the situation it is easing now, right now, Ghana has the 5th largest credit default swaps in the world, only after countries like Ukraine, El Salvador, Egypt, Ethiopia. And for you to think that at the situation Ghana is in now, Ghana's credit default swap is currently at about 2,100 basis points, or 21%. Nigeria is at 1,350 basis points, or 13.5%. You know, so going forward, if in 2023, next president, based on the Appropriation Act that has been sent to National Assembly, needs to borrow $20 billion in order to fund the budget for 2023. The next president has an option to either raise the debt to GDP, the revenue to GDP ratio from 7%. He needs to raise it by 5% in order to be able to fund the 2023 budget without relying on borrowing, selling more euro bonds, which foreign investors don't want to buy, or without relying on the CBN ways and means lending window, for which Mr. President has already written in National Assembly to allow CBN to lend them another 819 billion naira. And I'll tell you what, I have a couple of suggestions for the Federal Executive Council. First of all, I believe that it's important for the National Assembly, this one is for National Assembly, to amend the CBN Act, Sections 38, to say that in the future, the CBN will need to seek for 2/3 majority approval from the upper and lower house of National Assembly in order for it to violate that 5% limit for real revenues of previous accounting year, which is Ways and Means lending. So without approval from the National Assembly, Ways and Means Committee, and the voting at the floor of both houses, upper and lower houses, the CBN cannot exceed that limit, which has caused a lot of cataclysmic effect, negative impact to the economy. On the other hand, if you look at the Finance Act amendment that was sent to the National Assembly for approval and passage, you note a few important changes. There are changes to VAT. First of all, I don't want to go into the broader issues on principles of derivation and how it's important for devolving powers to the center, exclusive legislative list, concurrent and residual list, and how it's important for the federal government, the next president, to consider the proposal of Governor Wike to actually have states collect their own VAT and personal income tax, the states to generate their revenue so that they can compete, and states should be in control of their resources and pay royalties to the federal government. I don't want to go into that discussion because it's another kind of worms entirely. But I want to talk about specific changes that can help the next president to generate revenues to avoid the debt trap that we're currently in. Number one, the fact that the finance minister has proposed for a single 50% tax credit on qualifying expenditure for downstream companies investing in gas, investing in drying, investing in purifying, either liquefaction or compression into compressed natural gas, CNG, or building pipeline infrastructure around Nigeria. the fact that she's also proposed that upstream companies are going to have to pay a punitive corporate income tax penalty from 30% that is currently on ground to 50% when that act is approved by the National Assembly for upstream companies that refuse to capture gas and decide to flare it in case where you don't have natural emergencies. I don't think that the solution alone is increasing the punitive damage that upstream companies in oil and gas pay. I don't think the solution necessarily is in giving them a 50% tax, single tax credit on qualifying expenditure, which is, a little bit similar to National Industrial Tax Relief Act and pioneer status for companies. It hasn't done much to incentivize institutional capital to come in.
Right.
If you speak to members of National Gas Association, both on the upstream, midstream, and downstream, they'll tell you that they have two major problems in it. Two major problems. And they'll tell you that the problems that they have that are stifled investment in gas sector, that is key, by the way. Gas is very key to helping Nigeria raise that revenue to GDP ratio. The two problems they've had, number one, is the fact that you have a wide gap between the official and parallel market rates, yes, which has cost the central bank, for example, to use $190 million to incentivize about $9.7 billion in FX flows into Nigeria in its ROT 200 program that I believe is a failure, by the way. You need to float the exchange rate, change the exchange rate mechanism, float it, have a single exchange rate.
All right, Kelvin.
Incentivize companies to bring in their capital so that they don't have to worry about pricing their risk for either profit or capital repatriation. Number two issue the members of National Gas Association will tell you is the fact that currently, as we speak, the Nigerian Gas Management Company, NGMC, actually has refused to deregulate the price of gas in Nigeria to allow gas to float according to international pricing benchmark or the Bent formula where gas tracks diesel prices by 40%. These are two major issues. If the government can address these issues, it can unlock institutional capital and it will see that gas will become a major stay for revenue generation and help the next president to be able to increase his revenue to GDP ratio to SSA standards from 7% to 12%, which is what he needs to avoid the trap
Thank you so much for those suggestions. We do know that we can never talk enough about the way forward for Nigeria, but thank you so much for bringing some light into especially that ways and means restructuring which the federal government is proposing at this time. Thank you, and compliments of the season.
Thank you. Compliments of the season to you too.